everyone, good afternoon. This is my first video on options trading blueprint. As you guys know, I have a course on this, but I want to take parts out of the course and go over 5 things that I use day to day, or I teach new mentees that join the Discord. So before we get started, I want to let you know my name is Mo. I'm a full-time options trader and an educator. I've helped over 5,000 people become profitable traders. Now, I'm going to go over 5 things that I believe can make you a successful options trader in, I would say, about 30 to 90 days, depending on how much experience you have. And I'm going to give you a free resource after that as well. And if we get time, we'll go over one of the trades that I took and why I took it. So we're going to get started here. The first thing I want to talk about is why most people who are very good as a stock investor fail when it comes to options trading. And the biggest reason for that is they trade stocks that they like. So when those stocks go down, their investor hat tells them you need to buy the dip, whereas buying a dip is it's a very deadly mistake, because you can get 9 things right, and if you get a period in the market where the market starts pulling back and you start buying the dip, you're probably going to blow up your account. We saw this with Nvidia, right? Nvidia went to 92, then went all the way to 150, and then it went back and people kept buying it, and now we're sitting at 95. There are puts for Nvidia all the way to 60 puts, but you don't see that because your time frame, your mindset is of an investor. So the first thing you need to do is get away from that. When you're trading a stock, you're just trading an alphabet. Honestly, you don't really need to even know what the company does. And I'll show you how I do it and probably go over one of the trades we took. Before now I get into it, what I want to do is share my A+ setup guide, and I'm going to show you how to get that as well after this. Give me 1 second. So it's a PDF. Let me see if you can see it now. All right, we're going to go through this. I'm going to talk about the mistakes a lot of people are making, a lot of mistakes that I made when I was a new trader. And then I want to talk about how to solve it and give you tools on how to do that. So first is over trading. And a lot of this stuff might be stuff that you've heard, but you kind of don't know how to fix it. So over trading doesn't necessarily happen because people are bored. That's the misconception. Over trading happens when you don't have a plan. So I call this an A+ setup. I'm going to give you tools on how to identify them. I might show you a trade or two at the end that look like an A+ setup, right? Over trading happens because lack of plan, and it happens because the mindset that the more you work, the more you will make money. This comes from the mentality of most people that work any kind of job, right? If you look at every single job that you've ever done, it's an exchange for your hours to get dollars in return. People come to do that in trading. That's called over trading, right? I don't like putting a number on how many trades you should be taking, because sometimes the setups are great. But my point is, if the setup is great, you might as well stay in it. Most people are micromanaging back and forth, and that's also causing over trading. Trading without a plan not only causes over trading, but it causes you to be inconsistent. I'll give you an example. If you come up with a trade and you make 50% profit, then you take another trade and you make 30% profit, and then you make another trade and you're profitable for 1 week, but you don't know what you did, why you're profitable. The next week you lose money. Now you don't know why you're losing either, because you're just taking trades based on call outs, based on gut feeling, based on news. If you want to be consistent, not if you want to be profitable, you can be profitable and consistently just following random call outs. But if you want to be consistently profitable, you have to have a plan. A plan doesn't mean extreme success. It means consistent success. That's where the difference is. Risk management, I talk about it. Most people hear it from one ear, take it out from another. Risk management is an art. right? And the goal here is to not maximize your profit, is to minimize your losses. Give you an example. We took a trade yesterday, QQQ puts for May 15th. I think we were up about 60 to 65% at close, sold half. Okay. Didn't get greedy. I think we're going to 4,800 on on SPX, which puts QQQ at 400. I did not get greedy because I don't have this market. It's very news driven. So when the market opened today, there was a gap up. I'm not freaking out because I've already sold half. Then the market rallies. I still haven't sold those QQQ puts because I'm not holding the full bag. Now imagine you're up 70%, right? Market runs last night. You're like, you know, whatever, we'll get a gap down. You probably would at some point today be either down or open break even. That will kill your confidence more than it will kill your profits. You could have a bad week, a bad month, and if you're confident, you'll get out of it. If you make money but you're not confident, eventually that's going to blow up your account. So managing risk doesn't mean you're going to make the most money. It's going to avoid big losses. That's what you want to avoid. You're going to have small losses. Small losses or planned losses are part of doing business. Cost of doing business, that's expenses. When you take random losses, they're actually losses. They're not part of doing business. Okay. Fourth comparison. I'll tell this to people, but a lot of people, you got to go ChatGPT this. In order for you to be a top 10% trader anywhere in the world, you have to average around $250,000 and you'd be the top 10%. And that could take people a couple of years, right, to get there. Most people want to get to that level in 6 months because they're comparing to other people. Look, everyone on Twitter and Instagram is making $1 million. Just know that. And that's, this is sarcasm. It's how it is. And that's sort of like how, you know, how people live their best life on social media. People live their best trading life on social media as well. Not a lot of people talk about losses. Not a lot of people talk about just mental losses. Like, been doing this for almost 5 years. There's so many times when I'm like, okay, I'm going to take a break. I feel like quitting. I feel like I'm not doing well. You can have one bad week and it can crush your confidence. That's how trading works because, you know, the market's changing. You can't use the same strategy every single day. I've been doing swing trading pretty much for 3 years, day trading before that. And in the last 3 months, haven't felt any single trade where I was like, you know what, this is going to go crazy, except one that I'm in right now because of the market condition. One good news or one bad news, the market fluctuates. Like today, they are just recycling old news and the market's running up, recycling bad news, market going down. It's just how it is. And then when you're doing that, you do swing trading, but you manage your risk by selling half. You take the risk off, right? Now I'm going to give you these key pillars and I'm telling you that I swear by it, people that follow it swear by it, and we're actually going to take a trade right now, like not actually trade, like I'm already in that trade, showing you this, okay? So the first step to this is flow. Flow is essentially unusual. That's what we're watching. Unusual flow means big buying orders, big sell orders. That tells you that there's a change in character for a stock. I'm not looking for big names usually, unless it's very odd. For what I mean by that is I'm not watching flow for Nvidia, Amazon, Google, Apple, because they'll always have bullish flow and they'll have a little bit of bearish flow because they're always hedging. I look for names that me and you will never talk about, SPSW, SoFi, stuff that I don't even trade, UPSD. If we see unusual, that usually doesn't see flow, we'll look at that. The second thing I like to talk about is risk reward, and this is tied directly to risk management. You're getting into a trade, how much you're going to make if you're right, how much you're going to lose if you're wrong. You don't know that part, you're going to be essentially blow up your account. If you could do risk reward right, you'll never overtrade in your life, because if you only touch trades that have a risk reward of 1, 2, 3, you're not going to find that many. If you're not going to find that many trades with that much risk reward, you're just going to sit on your hands. What I call this A+ setup is sort of like a pair of glasses that you wear and you only see setups when they are with these criteria. So that's why I like that, using that analogy. The third is key level. Now, you know the most important part in a trade, it's not your entry. It's not your profit taking. It's your stop. Every time you take a trade, you need to know exactly where you're going to get out. You need to exactly know how much you're going to lose. That is your cost of doing business. It's called a predefined loss. Read a book called Trading in the Zone and talks about this. Every time you enter a trade, figure out what your stop is and how much you're going to lose before you enter the trade. Every single time you enter the trade, assume that stop is going to get kicked and you're going to get out of the trade. There's just two things. It makes sure that you're ready for this trade, and it makes sure if it does get triggered, you have zero emotion. You move on to the next trade without any worry. Okay. So I like to take my trades on key levels. I won't talk about supply and demand today. I have a video that I'm working on. So for me, the key levels are moving averages, the 50, the 100s, the 200-day moving average on daily. Lately, I've been using weekly moving averages. Those are extremely strong as well. Like NVIDIA, the 200-day moving average on weekly is 55. That scares a lot of people. Could that happen? Potentially. I'm not saying that's where we're going, but people keep buying the dip. If you bought NVIDIA at 100, it goes to 50, you're down 50%, correct? In order for you to be break even, the stock needs to move 100%. This is why buy the dip doesn't work. Your dollar cost averaging, that's completely different. You're trying to time, I don't know if that works. There's a way you could do it with risk management, which I've talked about multiple times. The next one is follow the trend. Most traders get this wrong, and I'll tell you why. I'll tell you the simple reason why most people get this wrong. When you go to Costco, you see Coke's on sale, you see Pepsi's not on sale. What you think, they're pretty much the same product, tastes the same, just different brand, you could care less. You buy what's on sale. People look at NVIDIA, people look at AMD. They think it's the same, they make semiconductors, NVIDIA is going up, AMD is going down. So for 6 months, that's what was happening. People kept buying at AMD and kept losing money. What is low can go lower. What is high can keep going higher. The logic behind that is if I'm an investor for something that's at all-time high, I'm in profit. In fact, when a stock goes all-time high, every single investor is in profit. We have a problem of FOMO. So most people seeing a stock hitting all-time high, investors are buying more. So the stock's going to keep going high. When a stock is at all-time low or going low, pretty much everyone that bought above that price is in losses. So at some point they get tired and they start cutting their losses and start moving money in the same sector to a stock that's much stronger. That's why stuff that's low will go lower. That's why I say follow the trend. There's a book called The Market Wizard. There's about 13 traders, I believe. Every single person say that one of the biggest reasons why I've been successful is because I play what's in trend. So if things are moving up, you'll always make money buying calls. I'll give you an example. SPY has been failing the 21-day moving average every single time it's touched. I haven't bought calls in a while, swing trading, right? For anything index related, because I'm fighting the trend. Right now, it's a downward trend. Until we get a change of characters, I'm not going in starting to buy dips, right? If you have 10K and you put $1,000, that's different. I mean, like how most people are buying right now, I wouldn't be doing that because nothing's been resolved. These are the 4 things that are there. I use them together. Sometimes I use first 2. Lately, I don't even take a trade if I can't catch all of them because it's already a high risk environment. I don't want to be putting even more risk by just guessing. Okay, let's go over a trade. I'm going to see if I can move my tab here. Looks like I'm gonna have to share screen. Give me 1 second. I'm gonna be sharing a chart with you guys. Give me a second. All right, here we are. Okay, so let me see if I can add more tabs to it so I can show you the flow. Okay, so the first rule of the A+ setup is flow. So we took a trade today. I'm gonna share my tab. Okay, so the flow I'm gonna show you, it was NVIDIA. Now NVIDIA has been getting puts nonstop. So Someone bought puts today. Look at this time, 116. I'm in CST. They added puts for next week for 100, 275K. Pretty heavy for NVIDIA. Next week, short time frame. Someone added today again 90 puts. This is far out next year. Someone added calls 130 September. I'm watching puts 100. So there's about $1 million in puts. So we have flow. Okay, so that's the first. The second one, I'm going to just focus on NVIDIA chart so I don't confuse you guys. Okay, so this is flow. Let's go look at it from a daily level. I want to knock the easy stuff out. So apart from watching the flow, this is the trend. It's downwards, right? So we've covered flow. The trend is downward. What else is there? Risk reward. So here's my risk reward on this trade. If this trade works, we're going to touch the bottom, but that's not my first profit taking, but that's one of it. The second is low of yesterday. Low of yesterday is this level here, which was also a double bottom. So that's 94.91. Okay. What's my profit taking? Not my profit. What's my stop here? My stop, I would say, is 100 or the high of the day. So we'll mark this red as stop. We'll mark our entry yellow. And we're taking our first profit here. We'll mark it green. If anyone has any questions, drop it in the comments. I'll be checking it. Oh, sorry, the chart's not showing. Hold on. Thank you, Kareem. Okay, you guys see, can you guys confirm you can see the chart? I'm gonna do this again, okay? I'm sorry. So we're looking at a daily chart, okay? If you guys can't see the chart, let me know. So we're looking at the daily chart for NVIDIA. These are my levels. I think we get here. This is the low of the day, 86.25. Then we have this as a level. These are my two profit takings. This is my stop, the high of the day, 99. I'm going to make this red. This is, if your chart doesn't look like this as a new trader, you got to learn how to do it. You can keep it simple, okay? It doesn't have to be complicated. Okay, so one more and then we're good. And my entry was around this right here. I'm going to do that yellow. I do this because it's easier for the eyes. So now we're going to calculate risk reward. Now I'm using TradingView. So what I'm going to do is click on the left-hand side. Where is it? Okay, we're doing a short position. So I picked that. I'm going to only focus on my first level of profit. I'm not focusing on the max. So here's what I've done. I've aligned everything. So the red is area that I can get stopped out on. The green is the area where I can make money, okay? Based on this, if you guys look at risk reward ratio here, it says 4.39. If you guys can't see, I'll read it out for you. It says 4.39, which means if I'm right, I'm going to make $4.39. If I'm wrong, I'm going to lose $1. Now, apart from that, we've covered, so let's talk about what we've covered. We've covered your trend for this chart. If I show you guys, it's downtrending. So I'm looking at puts. That makes sense. It has the flow for puts. It has a risk reward. Am I taking them on key level? Let's see. It's on supply zone, but so we're looking at daily. Let me see where the moving averages are for this. I didn't check that, to be honest. I just took this trade and I'll show you how up I'm on this trade in a second. Give me 1 second. I'll tell you where I got the flow from. Yeah, it's not we're needing the moving average. Okay, so but this is where the supply zone is. This is where the sellers are sitting. So DP is asking the question, where do you get the flow from? That's my Discord. That's golden flow. Anything over 1 million shows up there. This isn't over 1 million, but it's big because it's short dated. So that's why this is a trade. This is how I'm up. I'm up 31.54% on this trade right now. I took this on my small account. I'm doing a 3K challenge right now. So I took it on there. Right now it's bouncing, but I think the market's very tough to play, to be completely transparent, for day trades and for small swings. But if I was to take this trade again, I'd probably go for that 100 puts. Not 100, I'd probably pick 95 for next week. That's a lot safer, but I did a very small amount on this. So that's why I did what I did. Any questions you have, drop them here. But let's look at another trade, okay? Let's do one more because I have time. They bought Alib puts. I think that semiconductor for 4 million for 718. We don't have to necessarily follow everything. So this is what the chart looks like. No, this is something else. It's not. So it is a downtrend. Let's look at the daily moving. So one thing I want to tell you guys is I always look at stuff from daily. I don't do 5-minute candles or any of that. I do that if I'm trying to look for an entry. Okay, so there is a 20-day moving average. So this would be my stop on this trade. Now, necessarily not going to be picking up this flow. This is too far out for me. I'll probably find something closer, but they're betting that this stock is going, oh, they went deep in the money. I don't do that either. The stock is barely green, so your first level of profit is 52. The risk reward is not there yet, because if we go up higher, you could potentially get stopped. So like I'll show you. So if this was my entry, this is my stop, cover it red, and this is my first profit taking. The risk reward is 1-to-1. So I wouldn't take this trade personally right now, but I would wait. So back to what I was saying. The first thing you want to do as a trader is get your mindset right. The second thing is only take A+ setup. The third and the most important thing you need to do is journal every single thing that you do. I just told people at my Discord I'm going to be journaling every single trade I'm taking on the small account so I could show you. And I don't do challenges, so I don't want you guys to think that I'm doing a challenge here. I think most challenges end up bad because I don't know if anyone's done those workout challenges, after you end those 30-day hard program, whatever, you go back to the normal life. I don't want to do the back to normal life. I take the account, let's say I did one before, I took it 3 to 27-ish, $27,000, then brought it back to 15K. I took a bunch of losses around the Trump news at 15K. I'm like, I'm just going to reset it. So reset it to 3K. Probably going to try taking it there, but I'm not really focusing on the money. I'm focusing on the process. When you do it for a smaller account, you have to be very disciplined. I think $3,000 is a very good amount. It works for me perfectly. I don't really care for 5K. I don't care for 2K. 3K is a good amount for me to do that. Why did you choose higher green candle for a stop loss instead of the green candle? Oh, it's because this is a 21-day moving average. This is a key level. See, what I don't want to do is what most people do. It's a good question. You could put this as your stop. Likely you get stopped out, and it ends up, so likely it doesn't even work. Like you put this as a stop and you just get stopped out. Why even do that? Remember what I said from the start. When you get in a trade, the most important part of the trade isn't your entry, it's your stop. Now, if your stop is wrong, it's most likely because your entry is wrong, right? But what I'm saying is you start this game backwards. You don't start with where you're going to take entry from. You start this with where you're going to get stopped out from. You start doing that, you're going to start avoiding a lot of trades. Let me know if that makes sense. These are the things that I would do. You want to download this A+ setup guide. I've dropped it on my Instagram. It's in my bio. Just download it there. Let me see if I can point you where it is. So just click here. And it's the A+ setup guide. I'm going to be doing one of these lives every single day on Wednesday and on Thursday. I'm going to try doing it every week, but it really depends on doing this during the market hours. Like, I know I committed to this. I really wanted to get into a trade, and I couldn't because I want to do this because I committed to it. So I'll be here tomorrow and Thursday at 1 o'clock. Download the A+ setup, try Paper Trader, see if it does anything for you. I've been doing that for the last 5 years. So I had a course called Options Trading Blueprint. I stopped selling the course 2 years ago because I wanted to only keep it for my mentorship. The first year we launched the course, we sold 2,500 courses. We were on Gumroad's most highest paid content creator. And I'm taking that from, I took that 4-hour course and made this into an A+ guide. I think it's very effective. Everyone that taken is always given good feedback. You should try it. All right, I'm out. Make sure you guys like, subscribe, and follow. Share it with your friends. I'm going to be doing a lot of free content. With that, I'm out, and I'll see you guys tomorrow at 1 p.m. CST. Bye, guys.